Hello and welcome to another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum, where all voices matter. I'm pleased to welcome back to the program Tom Caldwell. He is the chairman of Caldwell Securities in Toronto. And as usual, Tom and I will discuss the latest in economic news and what it means to you. Tom, welcome back.
Thank you.
What is your latest sense of the economic picture these days, Tom?
Well, interestingly enough, the economy seems to be grinding. I'm speaking of the US economy, grinding ahead, still relatively positive, no blatant signs of weakness just yet, which in itself is kind of problematic. It would be rather good to see some bad economic news, which would actually help the stock market. I know that sounds perverse, but the linkage in investors thinking, at least in professional investors thinking, is inflation, interest rates, recession. And the way they tie together is if inflation continues strong, central banks will drive interest rates significantly higher.
Right.
And that indeed may push us into a recession, which is what's happened historically. They always overshoot. So that's been one of the worries. And that's why we've seen a few days ago a significant decline in markets when the inflation numbers were just a tiny bit higher than expectations, like 0.2 of 1% or 0.3 of 1%, and just everybody ran for the door. So there's a sensitivity to this interest rate business and inflation as far as capital markets go.
Yeah, let's continue on the U.S. front just for a second then. I guess there's an expectation that the Federal Reserve is going to do another three-quarter point hike. What's your sense of how that's going to play out in the U.S. economy?
Well, I think everybody's kind of baking in another three quarters. If they came out with a half, that would be cause for a degree of economic optimism and up would go the markets. If they came with one, then that would scare people. It's really this, we're overreacting to micro events.
Right.
Inflation is there, it's real, it's going to take a while to deal with, and much of it will be self-correcting.
Let's talk a little bit about the recent Bank of Canada rate hike. Did you expect that? What do you think the impact's going to be?
Um, you mentioned Mr. Poilievre. I tend to have roughly the same view of the Bank of Canada. We tend to be behind the curve. We do what America does. We have to maintain a certain spread between our rates and theirs. So it's the Fed that calls the tune. I don't know that it makes a great difference in Canada, other than the cost of borrowing, of course. But I don't think it has an impact as much in Canada as it does certain psychologically in the U.S.
Interesting. So you think in Canada it's not really as much of a concern then?
Inflation is very definitely, but we don't see the Bank of Canada as an independent agency. That we
Right.
have to maintain a certain spread vis-a-vis the US to maintain the value of our dollar. And we want to keep it within a band. And it was weakening, it's sort of strengthening a tiny bit now. So that's really the factor here. Yes, we have inflation, but a lot of the types of inflation that we are experiencing have very little to do with interest rates. It has to do with supply chain. It has to do with energy prices. It has to do with, significant government fiscal spending programs. It has to do with financial giveaways. Again, part of it during COVID may have been necessary. I'm not going to fault that, but there's an awful lot of fiscal stimulus and profligate spending, if you will, that have caused this inflation, including very low interest rates as well. So a lot of it is more supply side than demand side, and that's true in the United States also.
Yeah. So do you think that from your perspective, uh, you know, uh, it's not going to have as big an impact on Canadian markets in the medium term, at least?
Well, to some degree, if you look at the Canadian markets, we are still, despite the view of Ottawa, a significant energy producing entity. We are viewed in the world sense as a petrocurrency, which is kind of countercyclical. If I look at, for example, everybody talks about hedge funds, and sometimes you end up with an inadvertent hedge. One of the big pools of capital that I run, Urbana, for example, our major marketable securities positions are in energy and financials. And it's kind of interesting because they always counterbalance one another. And the energy prices run up and the banks come down, and it's the other way around. So it's a hedge that I've created, should we say, inadvertently.
Yeah,
It's,
yeah. Tom, hold
sure.
that thought. We're just going to take a brief break. Welcome back to Boom and Bust. I'm here with Tom Caldwell. He's chairman of Caldwell Securities in Toronto. Tom, you were just making the point about hedging, and sometimes it can be inadvertent, but nevertheless important, I'm sure.
Absolutely. Because of course, one area is impacted by interest rates, the financial service interest rates, and the currency, where the other, of course, is energy prices. So they tend to offset one another. And again, not that I purposely structured it that way. There were two sectors that I like for varying in different reasons. But it's the interest rate game is, we really are not masters of our own house
Right.
when it comes to that. It's the U.S. Federal Reserve sets the trend, the tone of interest rates for us.
So how do you expect markets to continue to behave then?
Well, there's a lot of volatility in the market. That's self-evident, and we tend to, like, for example, the fact that we missed an estimate of inflation numbers, which are flawed numbers anyway, by 0.3%, and the market goes down, 1,200 points in the Dow Jones. I would deem that an overcorrection, but or an overreaction, should I say? I think you're going to see this volatility, and one of the things one has to understand about equity markets is, there's the old phrase about a poker game. If you're in a poker game for more than a half an hour and you don't know who the sucker is, it's you. And it's a little bit something like that in markets, that there are mechanisms and trading and organizations in place that can exacerbate positive or negative trends. And they are at play at all times in markets. A story historically I like to tell is when Wellington beat Napoleon at Waterloo. The Rothschilds had passenger pigeons, and they knew in London right away, or fairly shortly, that Wellington had won. And it was, oh, so what they do, go buy the market? No, they went out and spread the rumor that Wellington had lost, and the market crashed in London, and they just scooped the market. And when the truth came out the next day, they made an awful lot of money. So the impact, the not manipulation, but the exacerbating of market moves is historic. It's just been part of our history. You just have to understand that the markets may not exactly represent what's going on in the economy, because
Right.
there are different linkages.
No, I get that point. That's a very good point, and we've seen that, as you're right, historically in the past as well. Let me talk just a little bit about the victory of Pierre Poilievre recently as the new leader of the Conservative Party of Canada. And it looks like the economy, affordability, inflation played a large part uh, in galvanizing his supporters to support him. Do you think that those issues, the economy, affordability, inflation, will play a bigger role in the political debate here in this country?
I think there's a bigger feeling than that. Many years ago, I was in Quebec City, and I was in a discussion with a very adamant separatist, and we were diametrically opposed. And I told him we would have to be extremely forceful on any terms of Quebec separation. And and he said, for example, I said, well, for example, the first condition is you must take Ottawa as part of a deal. And the both of us started chuckling. And he said, I don't want to do that. I said, well,
Yeah.
that's how tough it's going to be. And I was talking to a friend of mine in Ottawa recently, and he was quite upset about this truckers' protest in Ottawa. And I said, you don't understand, living in Ottawa, how the rest of the country hates, not dislikes, hates Ottawa, and what we've had to live through, of platitudes, of false issues, of, it's, people are fed up. They want something different. And everybody talks about Trump. Trump was not don't think of Trump as a person. Trump was a protest against Washington. I don't mean to even use that in the same name as the head of our new party, our Conservative Party in Canada. But there is a sense of malaise. People are tired of the same old rhetoric, the same old issues that are long gone. We're interested in growing an economy, creating opportunities for jobs, building, feeling proud about Canada, not being hanging our head in shame of all the terrible, terrible things Canada's done. Canada's a wonderful country, and we've done great things. So it's like we're looking for a rejuvenation, a new vision, and everybody's tired of the old infantile, hackneyed issues. Oh, we've done all these things wrong. Write more checks,
Right.
or climate change. Yeah, we know we have to clean up the place. We understand that, but you got to get onto another game plan. Let's build Canada and feel proud about it. And that's the bigger issue. Inflation and these things, they will get resolved over time.
We're speaking with Tom Caldwell. He is chairman of Caldwell Securities. We've got a brief commercial break coming up. Stay with us. Back after that break. And we're back here at Boom and Bust. I'm here with Tom Caldwell. He's chairman of Caldwell Securities. Tom, Canada suffered a 40,000 job loss in August, which was the third month in a row. Does that mean anything? Does it portend anything? Your thoughts on that?
I think it does portend a great deal. We have countries are in competition just the way companies are. We're in competition for smart people, for money, for investments. We have, to paraphrase a phrase used at a different time, we've never missed an opportunity to miss an opportunity. We have had no policies in terms of where we go as an economy, what we want to be when we grow up. You look at Mr. Schroeder from Germany, the disappointment in his face when we say, "Oh, we're not going to do LNG." We've talked about liquid natural gas processing in Canada for 30 years. We should have been supplying because it's environmentally friendly. In Asia, it replaces coal. That helped all of us, but it didn't fit the mantra or the narrative of the time. And then again, we're blocked there by different interests. We can't go over certain properties or grounds. Similarly in Quebec, with no pipelines going across there. Either we're a country or we're not a country. So my point here is we can't supply LNG to Germany or in Europe, and there's going to be a big problem coming there. So we are an energy powerhouse, and we're doing our best to sabotage ourselves in that regard. But we don't have an overall policy of a country unified, trying to do something, trying to build something. Meanwhile, the rest of the world is driving hard for jobs, for opportunities, for plants, etc. And remember, our American cousins are quite protectionist. They're on again about softwood lumber. That's been going on for 20 years, for Pete's sake. So we have to be a factor on the world stage, not just in world trade, but everything, so that we have a say at the table. We don't anymore. We are represented really by just smart aleck comments at G7 and these. It's an embarrassment, and everybody knows that. So the point here is we are falling behind. If I look at the portfolios for which I'm responsible for, I'm not saying this is going to happen overnight, but over time, we're going to fall further and further behind. Ergo, my investments are still skewed. I stay in North America, but more toward the United States, because even with their problems, they understand business. But we are often these side issues that frankly are sophomoric. And we've got to get beyond that. And that's going to, job losses, get used to it. We're not going to keep up. And an interesting thing, one of the biggest capital investment sectors in Canada is housing. Hey, that's great. But guess what? Housing is a non-productive investment, because once it's built, the only money it generates is for gardeners, etc. We're not building the plants and the equipment, and that's skewing our numbers the wrong way. I don't know whether Ottawa's really paying attention to that.
Well, that's a really good point, that to base not your entire, but for most of your economy on housing stock may not be the smartest thing in the world. It has short-term advantages. So.
Well, I look out my window here in Toronto at all the condominiums that have been going up and forever. And yes, we are an immigrant country, and that's a wonderful thing. And Toronto is an immigrant source, because you can come from anywhere in the world and you're going to find your community in Toronto. This is great things. It adds to the mosaic. But all of these condominiums, we're going to fill them up. What are we going to do for jobs? Because I look in the buildings that I work in, say I work on King and University, a lot of these stores downstairs are closed now permanently.
Right.
Even there's a lot of people coming back, but not at the same numbers.
Right. Yeah, I want to talk, maybe we'll get into this now. It might be also after the break, but is work from home sustainable, do you think, Tom?
Well, I can only speak of our industry. Our industry, at least our company, we're an idea organization. Ideas travel verbally. You bounce ideas around, you refine them, etc. If you're going to build a business, it's not the same. You can delude yourself and say you're doing a good job. I mean, take a look at the passport office. The government people are at home, lineups around the bus, social insurance numbers, all of this stuff. It does not work as well. I worked from home many years ago when I was setting up a company. It didn't work. You're not as efficient, no matter how you delude yourself. But we basically have policies that, work-life balance. That's great. But if you want to succeed at something, you got to have imbalances from time to time. Otherwise, you got to have. When I was a young man, I had to work hard. I have a little bit more of a work-life balance now, but I earned it as opposed to starting out that way.
Indeed. It'll be interesting to see what the trends are in the future on that, and maybe it depends industry by industry too. We're going to continue our discussion, however, with Tom Caldwell. He's chairman of Caldwell Securities. Very interesting about the state of our economy and his perspective on it. We've got to take one last brief break, but we'll be back. Please stay with us. We'll be back as soon as we can. Welcome back to Boom and Bust. We're speaking with Tom Caldwell. He's chairman of Caldwell Securities. Tom, we were just talking about work from home. I'm just going to circle back to that because I think you're right that certain segments of our economy, how do you keep your top talent when they don't want to show up at the office? So if the work culture doesn't sustain that, what do you do? And if you start insisting on it, they'll go online and work for a New York company or a Dubai company or whatever. Have you heard stories of that as well?
Well, it's quite interesting. If you think you're going to work from, say, Niagara on the Lake or some very nice, pleasant thing like that, that's fine. But if you're going to remote work, let me tell you something. I can get very efficient workers, analysts in Bombay at a fraction of that cost.
Right.
So whether you like it or not, you're opening yourself up to competition. A lot of the large U.S. investment banks have already moved in that direction. So what I'm suggesting is that if you want to get ahead within an organization, you got to be there, like it or not, out of sight, out of mind. Similarly, if you want to do an effective job at whatever your job is, it's communicating with people. I always tell people we're not in the investment business; we're in the communications business. Anything that undercuts that communication undercuts the service you provide to your clients and to your team members. You're not participating in the team, contributing, or benefiting from it. So you can cut it any way you want, however you want to rationalize it. But widespread, you're going to have a less efficient economy going forward. But on an individual basis, you may find yourself without a job over time because you'll slowly work your way out of it. And I went through one of these. I get a kick out of students having gap years. I never had the money to have a gap year. I had to stay in school and work and whatever. But people are doing that these days. And I went through a period like this many years ago. And I can tell you, I know I wasn't as efficient. I would start to fill the day with junk. I got to get the car washed. My wife wants me to do something. Can you look after the kids for a minute? Like it or not, there's this impinging. And I have to stay focused on what I do. And I stay focused and I refine my ideas by bouncing it off my partners and associates within my firm. So it doesn't work. You can cut it any way you want. It does not work.
Doesn't work.
And you are becoming vulnerable to not moving up within an organization. You wonder why you're not going to be getting those raises or promoted. Or you may find one day that the whole division is downloaded to Bangladesh or someplace like that, where you can get really smart people at a quarter of the cost.
Right. We've got about a minute and a half to go, Tom. Food security is turning out to be a big concern these days. Is Canada well positioned on that front?
Well, everybody's well positioned until they're not. It can be fertilizer prices that are going through the roof that's sort of hurting yields and crops. Canada, remember, we only produce a certain product. A lot of vegetables and fruits. We have to buy that. I always get an interesting thing. Everybody's talking about sustainable. Well, mankind has lasted a millennia or two, and we're going to be sustainable, but you're going to have dislocations during periods of time. The dislocations will not, I think, in the Western world show up as no supply, but they will show up as increased costs. And most consumers are fairly rational. You're just going to cut back on certain things. You may cut back on some fresh fruits. You may, juggle your most people who are doing shopping on a regular basis are fairly smart for food. I'm not. I go there and I buy all the things I like, the pepperoni and stuff. So I'm not allowed to go shopping because the bill goes up 3 times. But people will get smart about it. The dislocations will show up in price, not in scarcity.
Interesting.
In the West.
We got 30 seconds left. Again, same question I usually ask, optimistic or pessimistic?
I have been an optimist because I noticed, generally speaking, optimists are richer than pessimists. So I thought I would lean to that side of the equation. And not that I compete with Warren Buffett, but it seems to have worked out a little bit better for me that way.
Well, we'll keep.
I would commend it to anyone.
Yeah, no, that's a great philosophy. We'll keep that one in mind. Tom Caldwell, thanks for joining us again today.
Thank you so much.
Well, you heard it from Tom Caldwell there. He's an optimist at the end of things, and hopefully that's a good sign in the future. Lots of issues buffeting, whether it's inflation or unemployment, cost of living, but at the end of the day, there's a way to conserve your family assets. So thanks for watching today, and we'll be back for another installment next month with Tom Caldwell.